to kick it off, I'd like to have each of you just tell us a little bit more about yourselves, your background, your experience, and the companies that you each work at. And as this panel is about all things startup funding, also let us know what types of startup funding that you personally have experience with. And so, yourself, company, startup funding. And just feel free to jump in here and kick it off for us.
Do you have a specific order you want us to go in?
No, just feel free to jump in. Yeah.
Great. Well, I guess I'll start off. My name is Rachel Robbins. I am the Senior Manager of Development and Education at the Enthuse Foundation. We are a nonprofit organization based in New York City, supporting women entrepreneurs globally. We host a variety of different events and different opportunities throughout the year, including a pitch competition. We offer monetary grants for women founders. We also have a robust blog where we post original content on a weekly basis, as well as utilizing our social media platforms to disseminate information to all founders. But specifically to answer your question, Maya, about the funding and what we provide. So our specialty is our pitch competition. This past November was the 4th year that we hosted a pitch competition for women founders, specifically in the food, beverage, and consumer packaged goods space. And the grand prize is worth over $22,000 in cash and prizes. So that is something that we are extremely proud of. This year, we also offered 6 monetary grants to women entrepreneurs. They didn't have to be in the food, beverage, or CPG space. And each of those grants were worth $2,500, and we're hoping to do that again in 2023. As far as my background, I actually started out working in New York City public school system, working with students on entrepreneurship and kind of getting them excited about starting their own business. From there, a lot of different twists and turns, as I'm sure my fellow panelists can also talk about. But as it relates to entrepreneurship, I also worked at the Harvard Business School Club of New York, which is an alumni association for people who went to Harvard Business School. And I worked on their entrepreneurship program there. So working with angel investors as well as HBS founded startups. So a lot of different experience and happy to help in any way I can. And thank you so much, Maya, for inviting me to be on this wonderful panel.
Yes, thank you. We're so glad to have you here.
I can go next. Hi, everyone. Thank you for joining. So I found it, my background is in economic development and private investments, primarily in latter stage investments through private equity, until I came across the funding gap that exists for women and people of color. So in 2018, I left my cushy job at a private equity firm to launch Stitchcrew, which is a 501c3. It's a nonprofit organization that partners with brands like the NBA, Google, and others to launch specific programming for women and people of color that are launching businesses, most of the time for the first time. So we provide programming, non-dilutive grants, and access to community and other networks. So that's Stitchcrew. And in 2020, because of the disproportionate effect the pandemic had on women in the workforce, we launched VEST, which is a private network of professional women. That led to investing together, so VEST Angels, and then this year we actually launched a fund, $20 million fund to invest in women-led companies, exclusively solving solutions in the future of work and care economy. So that's kind of my background and how I contribute.
Awesome. Thank you so much, Erica.
Guess I'll jump in here. Hello, everyone. My name is Kathleen Minogue. I'm the founder and CEO of Crowdfund Better. We're the leading education and technical assistance organization for crowdfunding in the US. We've been doing this for about 10 years. It started with me launching a crowdfunding campaign and having no idea what I was doing, and then turning around and reaching down, lifting someone else up, and that turned into Crowdfund Better. And where the idea for our focus on education and technical assistance, I spent some time in tech investment banking during the dot-com boom. I'm aging myself slightly here, but what I noticed is who did and didn't get into the funding conversation. And so when crowdfunding came along, I saw it as an opportunity to open those doors to more entrepreneurs. And so we support entrepreneurs who are looking to use crowdfunding, donation, rewards, investment, lending, all types of crowdfunding. So we are an organization that sits sort of over the ecosystem. We're not a platform or marketing agency, but really focused on helping entrepreneurs understand the opportunity.
That's so great. Thank you for being here, Kathleen. So nice to see you.
Hi, everyone. I can jump in next. I'm Mainiko. So I'm a partner and chief experience officer at Chloe Capital. But first, before all that, I am an entrepreneur myself, technologist, mother, and visionary builder. I like to label myself. My background is in IT and I sit in Chicago, but our firm, Chloe Capital, is headquartered in Ithaca, New York. Chloe Capital, we're a movement-driven venture capital firm. We invest with a diversity and gender lens. So we really focus on diverse women tech leaders who are solving the world's biggest problems across climate and education and health, really trying to move the needle on underrepresented founders and overlooked founders who are not receiving VC investments as they should. So at Chloe Capital, we invest in C through Series A companies. We lead or follow in rounds. We make equity or debt investments. So we are that usually one of the first institutional investors that you would bring in. We do checks between $100,000 and $250,000 up to $1 million with follow on. And outside of that, I am an angel investor myself as well. So happy to be here.
Wonderful. Thank you so much, Mainiko.
And I think it's just me. It's an honor to be here today. I love Grid 110 and to be speaking amongst all these wonderful women. So I'm Sophie. I'm based in Los Angeles. I started my career actually in international development, and then when I was in grad school, I founded in a tech company that failed, but that got me into the startup world. So I've been working as an operator for the past many years at different stage startups and used to work at Techstars, so have a lot to share on accelerators and that kind of funding source. Now I'm at Silicon Valley Bank. For anyone who doesn't know, we're a large financial institution. We work primarily with what we call the innovation economy. So tech startups, that companies that are really looking for VC funding. We have a commercial bank, we have private wealth management, and we have a capital arm as well. I can speak really largely to VC funding, but because of my prior history in international development, I can also speak to grant funding, especially if you're working in social impact space and looking for non-dilutive options. It's great to be here today.
Amazing. Thank you, Sophie. Appreciate the Grid 110 love. Well, those are some incredible introductions. Attendees joining us today, I also wanted to mention you can feel free to use the chat if you want to introduce yourself in the chat. If you've been to one of our Funding Pathways events before, we like to keep this as interactive as possible. And since we have a lot, if not all of us on the call joining today as founders, feel free to introduce yourself and your business in the chat. You can write any additional questions that may come up for our speakers. And you can just use that as a resource to share anything there. Okay, one thing I want to note before we jump right into the questions is just like how we have our speakers joining us today with various different backgrounds on funding. We also have our founders in the room who are, at all different stages of their fundraising journeys. So during the panel portion, I like to ask a few broader questions kind of just touching on different stages of the fundraising journey. That way you can each ask more specialized questions during breakout rooms, and kind of get a feel for whom it might be best for you to connect with afterwards. All right, so that being said, my first question for our lovely panel is just kicking it off with groundwork, just starting out. This founder had asked, what should one do to assess their funding need and direction when they're in the beginning development stages of starting to find funding for their business? So, they've been testing, iterating, getting some traction, and now they're realizing like, okay, I need to start thinking about raising and capital. So at this point, what questions should they be asking themselves? What considerations should they be making to assess their business? And same thing here, just feel free to jump in.
I'm happy to kick in with actually a question that I think entrepreneurs should ask even before this, which is, what kind of funding would you like? And, a big way to think about it is, do you want to own your company as much as possible? Or are you okay with bringing in, let's say if you want to bring in venture capital, right? Which I hear a lot of people are interested in. Are you okay then with the equity in your company or ownership in your company going to those investors? And I think really sitting and thinking about that, and personally how that would feel is important. And then also, how big do you want? Like, how big do you want your company to go? What does that mean to you? Where do you see yourself as the CEO of a company? Are you dreaming about it being 20 people? Are you dreaming 150? Are you dreaming, hundreds of thousands of employees? Because just starting from there and your kind of own management style and the dreams you have, that will also help you think through the right type of funding for you. I'll let some other
thanks. I'll piggyback off of that. In your question, the founder asked that they were ready to start fundraising, they had some traction and things. I would probably say that this question should become before all of that. So before you actually, have your MVP, before you are ready for fundraising, before you even build out the company, while you're doing your business plan and such, you need to be asking this question of what type of funding that you think, you want to go and look for, and then continue to do things like this and talk to other investors to see what type of funding your company would fit best for your company. So something that I always tell people the most important question to ask before trying to say, okay, I want to get VC funding is ask, is this company venture backable or is it a lifestyle business? And that is going to put you in the right direction of what type of funding you should be seeking or would be eligible to seek. And also think about, is this company scalable quickly without me? If I remove myself from it, can it still scale quickly? And that will help determine also what type of funding is best for you to seek. But ask this question way early on before you're like, okay, I need money.
I agree with Sophie and Nico. I think that also understanding the industry that you're in and what exactly your product is key. And I think that tailoring your approach based on that shows that you're taking a little bit of the initiative and the research. So for the Enthuse Foundation and for our pitch competition, we are focused on food, beverage, and consumer packaged goods brands. So something that's maybe app or software focus wouldn't really be the best fit for us. And I can't tell you how many times, and I don't want to speak for my fellow panelists, but we get people that maybe don't fit into our thesis. And so being very clear of who is my target, what is my target market, and what is the best path for us. And so also being mindful of our time, I think really goes goes a long way in showing us that you are prepared. And don't be also afraid if I'm not the right fit for for your organization or your company, maybe point me in the right direction of where else I can go to get that information as well.
I'm just going to add in here. I always talk about the capital stack with entrepreneurs, thinking strategically from day one. And one of the ways I think it's easy to think about that is to go look at a company that has been successful in, that is similar to yours. How did they get to where they are? I'm often discovering that a lot of companies started with rewards crowdfunding, but I only hear about it once they've raised angel investing or venture capital. So doing a little research, getting some comparables and thinking about multiple types of capitals. It may take you 3 or 4 different types, multiple rounds to get where you want to go.
Awesome. Well, yeah, thank you so much for those insights. Definitely doing your homework, finding, founder investor fit, assessing what stage you're in, what industry that is. It is definitely different for everyone, but I think these are some really great best practices and insights that are applicable to all. So moving on to my next question, this is a little bit farther down the fundraising journey. You've got the ball rolling, you're now actively seeking out investors, whether that be in the form of VCs or angels. This founder asked, how do you define traction? A challenge I have is that investors all seem to define traction very differently. And I think this is a good question, but it's also something that kind of depends on industry and things like that. Also applicable to someone, even if you're applying to grants or accelerators, you still need to display your traction in a way that makes you, look suited for the opportunity. So yeah, if you could just jump in on here and talk a little bit about defining traction.
Sure, I can kick this one off. Absolutely. I'm so happy someone asked this question because traction is defined differently for every single firm, every single type of funding option that you have. And even so, I'm an angel investor outside of Chloe Capital, and I define traction for the angel investments that I make differently than Chloe Capital does. So it's one of those things that when you are fundraising, it requires a lot of research and a lot of homework. And that's one of the things you're going to have to, try to find out through the websites or such of, whatever funding opportunity you're trying to take advantage of. And so for Chloe Capital, we define traction as your product is in the market, right? So you are past that MVP, you're past beta testing, and you have some revenue. So it could be small, it could be a handful of customers, but that is how we define traction. But that is Chloe Capital. I as an angel investor define it differently. And we do accelerator programs as well. And we define our traction for the accelerator program slightly different. It's still relatively close, but it's a little different. So yeah, unfortunately, that one's something that I do a lot of research on.
I think you need to ask the investor that you're talking to that exact question, because as Miniko just say, it's different for everyone. For us at Best, it depends, right? It could be you already have a product. If you're pre-revenue, you could show traction by showing us that you've already secured contracts with paid pilots, or you have your MVP ready, so the product is actually done and we can test it or see how it works or what the benefit is of using it. Traction can be, how many people you have. It just depends. It really does vary. So I think the best way to tackle that is when you are talking to investors, ask them that same question. How do you define traction? So that you can then best position yourself in, there's multiple ways that you can show progress. Think of it not as traction, but as progress and how you can define it, but always ask that question of people you're talking to so that you know how to position yourself best.
Just to piggyback on Erica, there may not be an opportunity to talk directly to an investor. You may be submitting something kind of a cold email or with a pitch competition, submitting an application. So then I think it's really key to look at their criteria and look at their rubric and what exactly they're looking for. So for us, for the Enthuse Foundation, our requirement is that companies have less than $500,000 of lifetime revenue, that they are at least or less than 4 years old. So for me, my traction definition is seeing that growth, is seeing that in year one, I made 100,000 or I had $100,000 in revenue. In year three, in year two, I had 200, and seeing that growth, because that is what my criteria says. So if you don't have the opportunity to ask directly the investor of how do you define it, see if you can find some context clues, either by other companies that they've worked with or their website, or if it is a pitch competition or a grant, other companies that might have won those grants in the past.
I also want to add in the importance of storytelling and the fact that the business that you're working on and scaling is you're the expert in it, or at least we all hope that you are. And so when you're speaking to investors or accelerators or angels or, you know, anyone that you're meeting that, you know, you're asking for an investment in, telling the story of traction is very important, because you're going to have to be educating to a certain degree, even with speaking to a sector specialist who, you know, has experience in your industry. They're not going to know the exact in and outs, and speaking to that market size, how you're reaching folks, how you've grown, the levers that go into how you've grown, and, you know, why you're asking for the investment and how that's going to, you know, further enable you to grow your business. All of that's really key. And so having that competency and that confidence goes really, really far.
Can I add something real quick? Because I think this is important, particularly for the women in the room. Don't let that hold you back, though, because you'll be surprised. Oftentimes our male peers, and this is not a shaming or like, I mean, good for them, but oftentimes they go and raise money with an idea on a napkin, not well thought out. But to your point, Sophie, they are good at storytelling or selling it or whatever. And oftentimes what we do as women, we wait until everything's perfect, until we know what traction is, until we have certain revenue, until, you know, we feel like we can provide those returns. And a lot of that is justified, right? The way, I mean, we receive less than 2% of venture capital. So we're always outperforming just to get half of the money that we deserve. So I get why we do those things, but I'm done with that. You know, I think women should just go for it. Shoot your shot, go for it. Talk to people, sell them on the vision. If you don't have the traction, if you don't have the revenue, if you don't have the MVP even, okay, well, tell us why you're the right person to solve it, why you're so passionate about the problem, why your solution is going to be 10 times better than what's already in the market, and just shoot your shot. Don't wait for things to be perfect. Don't wait for people to define how they define traction. Just go for it. I really wish more women, I know we don't have the same latitude to fail based on, you know, where the money has flown previously, but we need to start paving our own path and just going after it, and then just seeing who the right investors that believe in what you're doing and that believe that you're the right person will see the opportunity and will invest. So just keep going and don't hold back on this traction question.
Yeah, and if I could just piggyback on what Erica is saying, a lot of people don't know that you can raise investment through crowdfunding now, through an exemption called regulation crowdfunding. And why I love this for women and founders of color in particular is, instead of going to the VCs who are 2% women, or, you know, whatever the percentages are these days, you can go to the population which reflects the diversity of the world, and look for people who believe in what you do and who care about it because it's important to their community. So that's another path. And if I could just ask the VCs on the call, because I hear from so many women, I don't want to crowdfund because no one in venture capital will invest in me. Is that true? I know it's not a blanket statement, you know, that you might be able to answer, but if they raise well, meaning they use, say, a safe or an instrument that, makes it easy for them to raise, other investment. Would you turn someone away blanket if they had used investment crowdfunding to start their fundraising journey?
No, absolutely not. We wouldn't turn someone away just because they use crowdfunding, but I do understand it has more to do with the cap table. So I do understand why a lot of venture capitalists don't do it and the terms that were originally set in the crowdfunding, but that's not true. If you crowdfund, it's not true that you won't be able to get VE or PE later down the line.
Yeah, I would agree. That's not a discriminator factor for us. If the terms make sense for us, which, yeah, it just depends on, well, everything Minico just said, I don't need to repeat it. Somebody mentioned on the chat, The Leapfrog by Natalie. Yes, it's a great book. I definitely recommend it and second that.
We've had a few of our founders have success with crowdfunding, usually because our sweet spot is about 300,000 in lifetime revenue. We've had a few of our founders after they've won our competition and their sales kind of grew, that they then went to the crowdfunding. But with us, we're food, beverage, and consumer packaged goods focused. It is very capital intense, making sure that you stay on the retail, making sure that you're able to fulfill those POs. So I think that hasn't, from my understanding, hasn't hurt them, but I can understand that it may from different types of businesses.
Thank you. Yeah, that was great. I like how, you pointed on just doing your research and asking the investor straight out, but also when that's not really a situation where that's not, possible, ways to just approach it head on. And I'm really glad that you brought up that question, Kathleen, to kind of, get more insight on the crowdfunding. So I see we're at half of the hour now. The time is just flying by. So we're going to transition to our breakout room portion. Thank you so much for just providing some wonderful insights here. And Erica, really love what you had said earlier. I see a lot of love in the chat as well.